The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 27th. Wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know, and I'm absolutely grateful for your presence here. More importantly, I'm here to serve you. So feel free to pick up that phone, dial on it anytime, 877-927-6648. Of course, internationally, you can call us as well at 727-445-1044. You can send me an email, steve@tfnn.com, inside the Tiger's Den, obviously, instant message, and I will get to any request that you submit. So let's go ahead and get this show kick-started on this wonderful and maybe a wild riding Wednesday out there. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we have the Dow trading down up 16 points. Almost said down, didn't I? 18,007. S&P is trading down 3 points at 2088. NASDAQ Composite off 45 points. You know, mostly attributable, not all, but mostly attributable to Apple. You've got the Russell 2000 down about 2 points, trading 1149. The DAX managed to close up 40. The FTSE up 35. You've got gold up $7, trading at $12.50. Silver's up 15 cents, trading at $17.26. You've got light sweet crude. That's up 77 pennies right now, trading at $44.81. The leader dollar-wise, the upside, you've got Priceline. That's up $15, a little over 1%. Jones Lang LaSalle, that's up 5.5%, $6 and change. L3 Communications up $6, about 5%. Assurant Inc. up 7%. That's nearly $6 to the upside. To the downside, Chipotle Mexican Grill down $23, about 5% out there. I wonder if they were out with numbers. You've got Buffalo Wild Wings. Yeah, they were out with numbers out here. Buffalo Wild Wings down $17. That's 12%. So we've got some movers and shakers to the downside. Amazon is off $11. That's about 2% out here. Google's down $10, but about 1% to the downside. And of course, Apple being the big thing. Let's go ahead and start there. See what we know about Apple at just past 1 o'clock in the afternoon. Well, one thing is for sure. We've got volume inside Apple to the downside today. 83 million shares thus far. Just straight line math, don't know if it'll be straight line math that ends the actual volume at the end of the day, but straight line math says you're going to do about 150. Now, the last time that Apple was down here with volume was on the trading session of January 27th. January 27th, price got down with 133 million shares. We should eclipse that volume today. That ended up not being the swing point. The actual swing point was on the following day, 55 million shares. Now, you had 133, then 55 million. Going into that August 24th session, that had 162 million shares. We're still trading inside it. At this stage, the call that remember yesterday we were looking around for signals with regard to Apple, and all the signals that you and I were looking at pointed to Apple disappointed, more so that shareholders were going to go ahead and sell it off. And in fact, that's what occurred. You got that big, huge island top out here. So everybody really, look, here's the way that you can read this chart. Another way to read it, forget about the fact that it stranded all of those folks. In essence, it's really stranded everybody ever since October 21st. For the most part, it has stranded everybody since October 21st, 2014. That's a long time out there. Those are all folks that are basically, if they've held those positions, that are in the red out here. So, expect them to tell you how great things are. I didn't think that Apple would move down with this kind of volume today. It does suggest, from a volumetric standpoint that it ought to get down and at least test that 92 level. That is the bottom of that August 24th area out here. Now, of course, that should be putting volume inside of the QQQ series ETF. So let's go switch over. Let's take a look at that. And the Q so far, 14 million shares to the downside. Now, that volume is not too shabby out here. That says you're going to do about 27 million shares. So as we look at the Qs out here, what does 27 million shares do for us? Well, are we breaking a swing point of an A to B equals CD to the downside with volume? Well, that swing point would be the trading session of April 22nd. And my goodness, the answer is no. Even though it is below that swing point, that does not mean that it cannot complete an A to B equals CD. What we know about the QQQ series ETF right now is that it has broken a swing point, almost made a 1-to-1 as we speak, because that projection would be 106.40. And it is basically doing it with light volume. That's what you would call your basic Tiger-Gartley pattern. That, in fact, could be setting up inside the QQQs out here. Down with light volume. 15 million shares should equate to about 27 million shares today. And that's with regard to the swing I'm looking at is the trading day of April 22nd out here. What else is this going into from a volume perspective? You got about 37 million shares back here on March 18th. So what does this mean for the Qs? Well, at this stage of the game, we know we're down below a weekly profile. Unless we were to see some type of reversal, some type of bullish signal, not necessarily today, by the way, then you would anticipate that price would move down to about the 104.47 level. But you got to be concerned that we've got light volume to the downside. Okay, so it takes care of Apple. It takes care of the Qs. We want to stay in this neck of the woods out here just to try to put things together. Let's go see at 1:12 in the afternoon, is the market in the hands of the buyers or the sellers when we take a look at the NASDAQ composite? First of all, if we just look at the NASDAQ composite, we can see here that it too is below the swing point from the trading session of, forget about those profiles. Those are, we're going to turn those off. There we go. So you can see here is the session on April 22nd. Now, I don't have volume inside of the indice, but I'll make the assumption, I'll jump to the assumption if the Qs are breaking that level with light volume, then so too would be the NASDAQ composite. May not be the case, but, right now you can see, so the same pattern out here. But how do we determine whether it is buyers or sellers that are in control of the NASDAQ? Well, the easiest way is to go take a look at the advanced decline price oscillator. So we're going to go ahead and take a look at that, not price oscillator, but the advanced decline line oscillator reading out here. And right now, it's got a positive reading. So even with the gap down, the island top inside of Apple, even with a move lower, potentially to be equal CD patterns in the Qs, the NDX 100, the NASDAQ composite out here, at this stage of the game, advanced decline, health is not too shabby in here. It is actually the buyers that are still in control of the NASDAQ composite. Okay, so that being said, does that mean that there's not a top in place? No. We're just trying to understand right now, and we'll try to give you the larger picture, but we're really trying to get there one step at a time. It's the only way that we can do this, the only way that I can do this. I'm not sure how you would do it. Maybe you would just use one thing and only look at one thing and make your decision that way. But not on this show. We're not going to do just that. So instead, what we're going to do is we're going to go take a look at some intraday charts for the NQ. Let's go see what the futures market is communicating to us. And the real fireworks, they begin in about 45 minutes or so, when Janet Yellen releases the minutes. Releases a statement. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 22, S&P is off 3, NASDAQ Composite down 44 points. So in the first session, what we took a look at, we know that Apple's moving down with volume. Similar volume to the August 24th, 2015 low out there, about 160 million for 162 versus about 150-ish right now. When we take a look at the Qs have gotten below a swing point and are doing it with lighter volume out there. That doesn't mean that they won't move lower, but there's no conviction inside of the QQQ series ETF. We went and took a look at the summation index, the volume, the advanced decline oscillator for the NASDAQ Composite, and it says that buyers are the ones in control of the NASDAQ Composite. Now we're switching over and taking a look at a couple of short-term charts out here. We're trying to understand what the NQ right from weakness is what we have to find out. Is the weakness showing its hands anywhere for us to anticipate what's going to happen? Now, I don't know what Janet Yellen is going to say or not say, or what words she's going to choose and use out there. And so, but let's take a look at what the market is communicating. What do we want to be watching for? How about that? What's the key levels for us to be watching for when the market goes ahead and responds? Now, this is the 2-hour chart here for the NASDAQ. And from the high that it formed, this is back here in the trading session. You'll see a little red down arrow. This is back at 6 o'clock in the morning. That is on April the 19th. From that high all the way down to the low that was made thus far, you'll see a series of A to B equals CD patterns out here. You know, here's one as an example. Here's one A to B equals CD pattern. You know, that went ahead and completed the one-to-one right here at about 8 o'clock in the evening. This was on Sunday, I believe. Was this Sunday? This was, well, stop beeping at me. I'm not referring to you. I'm referring to my system out here. When was that? That was on April 21st. Just a slight bounce out there. There's another A to B equals CD that we can look at. We can come from, and you should be able to visually see them. But here, here's another A to B. Oops. Got to grab the right thing. I let go of the mouse a bit too early here. Let's see if I can actually do this. From that hammer, there was a hammer candle that let loose. Now we've done the 1 to 1.618 A to B equals CD. Now I mentioned the hammer candle, and that is important, right? Because a hammer candle helps us identify when the market is forming a bottom out. Oh, Lord, I just got to grab the right thing out here. Okay, here was a little hammer candle that formed out here. This is 8 o'clock in the evening. This is on April 21st. Once you see it close below a hammer candle, the theory is, and it's a good theory, by the way, if you're long, you're wrong. That's really how we take a look, because it should be support. Well, therein lies the next factor for us to be looking at. Because when we have these A to B equals CD patterns that have confirmed, and if confirmed with a hammer candle, it says that the pattern is over, the market should be able to move higher. That's what actually took place here in the NQ on the 2-hour chart as we came into the 12 noon time frame. Now, between 12 noon and 1:21 p.m. where we're at right now, we are not getting any kind of conviction behind that hammer candle. Prices move lower. Does that mean that the market's going to move lower? No, not necessarily. If I were going to teach you how to buy a hammer candle at the completion of a pattern, I'd say you'd look for price to get down to 50% of the wick to the bottom of the wick. And if there was a close in a session below that hammer candle, if you're long, exactly, you're wrong. So that says what we want to be watching for between, because I don't know that it's going to be taken out between now and 2 p.m. So between 2 and 4, we want to be watching to see if the NQ closes below the price point of 43.72 and a quarter. Now, price was moving down, doing it with less relative weakness out here. We've got a 6 wave to the downside, so you're really close to that 7th inning stretch. And for all intents and purposes, price should have bounced from here. Okay. So where did the bounce stop? Where did the hammer candle, in essence, stop out here? And that says we need to go take a look at a lower time frame, right? Because we want to understand where the bulls and bears, where the buyers and sellers are. Let's switch over to this charting tool. Let's take a look at this 30-minute chart. Let's go ahead and blow this up on the screen out here. So here's your 30-minute chart for the NQ, right? And there's so much information that you and I can glean off of this, taking a look at our TAS market profile. So remember, on a 120-minute time frame basis, we saw price get down and form a hammer candle. At the same time that was going on the 30-minute time frame, take a look. Let's go ahead and turn price off here. Give me a moment. I'll just turn the price off here because when that was forming a bottom on the 120-minute chart, look at what the market profile looked like, right, on a 30-minute time frame. Did it form in bearish fashion, meaning below the prior one? Oh, absolutely. But take a look at where the buyers and that point of control were lined up. This said that the market, the NQ, ought to bounce. Well, where did it find resistance? 4,400 is the top of the box. Look exactly where the NQ found resistance. It got up to a high of 4,400.75, and 4,400 even Steven out there was resistance. You got to like it. Now price is doing what? Price should pull back at a minimum to the point of control, to that 43.81 level. We're at 43.84. Maybe it's going to pull back and test the low of that market profile, 43.7688. And we know if we see a close below that low, that would suggest to us that that hammer candle is going to fail. There is where we know the current battle between the bulls and the bears are. And that would be of assistance to trying to identify where price is going to head to, right? Yes. Let's go take a look. So let's step out from here. Let's step out from the 30-minute. Oh, by the way, one thing. Here's one thing that you can notice. When this does not happen often, but for those of you that use these profiles out here, one thing that you want to be watching for, because as you know, here's the move from last night, right after the earnings during that 6:30 during the 4:30 session out here. Here's that first big move to the downside between 4:30 and 5 inside of Apple. Huge move, huge wide-ranging bar. That's really not what I want to show you. What I want to show you is see when this new market profile formed. That was at 7 o'clock last night. See how this formed above price. Right? See how all these other profiles form and prices traveling with inside it, at least to begin with or start? In this case here, when this market profile formed, right, this told you it was really very bearish. Now, did you need to know that? If you're taking a look at understanding where support and resistance is, yeah, you really did need to know that. That's why price went ahead and moved lower, into the 10:30 to 11 o'clock time frame. So this is the key level to be watching for. And you've got a valid buy program, buy signal out here inside the NQ on our 20-minute basis. Now, what does that mean? That means that price could certainly bounce if these lows hold. Where could price bounce to? Well, in just looking at this chart, you've got the daily TAS market profile out here. And the bottom of that box, which prices move through, would be the 44.40 level. I would say that would be the extent of any bounce if the market goes ahead and responds positively to Janet Yellen's release of whatever statement it is that she's going to put out there. That's intraday. But what does that mean for the NQ? Well, the NQ has given us a huge, at the NDX 100 as well, has given us our first real confirmed sell signal out here. What do you mean? That's a good question. I'm just looking for the chart out here. Well, actually, where did that chart go? Here we go. Okay, I'm going to put this chart up on my screen. Yesterday, we took a look at a couple of some proprietary tools that I have created that really help us understand which side of the trade to be on. And you're looking at my screen. The top of the chart is the NDX 100. The bottom is the NQ. And you're looking at a little red squiggly line. You're looking at a black line out there. They're both squiggly. They're solid. But when you see a crossover, the red line, this is an important red line, get below that black line, that tells us that we've got a absolute change in trend that is in place out here. And take a look at the NDX 100 as we speak right now. And guess what we've got? We got that signal, of course, today. Take a look at the NQ. We got that signal last night. This says a change in trend in place. This says the bounce would be a counter trend rally. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Dow's up 7, S&P's off 4.5, NASDAQ Composite down 51. So now if we step back, take a look at what we've identified as we speak right now. We know that the NDX 100, the NQ, they've given us clear conviction sell signals. I'll go ahead and put this chart back up on the screen out here. Now, there are failures with regard to this little proprietary indicator that I'm showing you. There's always failures with everything, but this works really good. How good? Darn good. I would say something else, but Ben, you just look at the screen out here, and we've got the crossover now to the downside. So inside the NDX 100, we know we've got an island top, right? It's as bearish as you can get. We now have this little crossover. We know that Apple is moving lower with volume into that swing point area. So bounces there should be pretty minimal. We know on an intraday time period, we can justify where a bounce would take place, but is that going to change the tone and the trend of the NDX 100 and the NQ? And the answer is no. Even on a nice healthy bounce, it is not going to change the pattern that is present now. What has to happen for that to occur? Well, the highs have got to be taken out. You've got a nice seventh wave inside the NQ out here. You've got the island top inside the NDX 100. So it is the first to have spoken with regard to a top. Now, that is as you and I move into the unfavorable seasonal cycle. Into the sell-in May cycle by around the middle of October, not November, because otherwise you're going to miss out on a big piece of a bounce to the upside out here. So we've gotten that message. That is clear, unequivocal. Now, the NASDAQ Composite has not participated just yet. That would be the next one to fall. I think that would be the next one to fall out here. We take a look at it. Actually, I think let's go ahead and put this up on the screen here. Here you'll see the NDX 100. I'm sorry, the NASDAQ Composite at the top. We don't have that crossover here, so we don't have a confirming message. We don't have a confirming message inside of the SOX. We have a seventh wave move to the upside, that's for sure. That's off of the bottom out here from back in the middle of February, but we don't have a confirming signal to the downside. That doesn't mean there aren't some patterns that have given us sell signals. There are. Price was moving higher, doing it less relative strength out there. We saw the cavalry arrive with some bearish signals out here, but we don't have that crossover. Another day or two, and we could easily get that to down. Maybe Facebook goes ahead and disappoints tonight. Maybe it's really yelling that disappoints, and it doesn't matter what anybody reports. Everything gets sold off. I don't know the answer to that. I just know that with regard to unequivocal sell messages, it's inside the Qs, even with this lack of volume that we are seeing inside of the ETF structure. Now, if we go take a look at, so what has been strong out here has been the IWM, has been. It's trading right now at 114.17. It has basically bucked all the ideas of a top forming, or at least that's what we had believed up until, well, we won't know until tomorrow. You might say, why? Now, we know that the IWM has busted through a descending trend line out here. So, bullish, right? It has gotten back up to the swing points out here from the trading sessions of December 29th, December 30th, where things really began to fall apart in earnest to the downside. What has also transpired out here, we go take a look at the Russell 2000. It's in your favorite wave count in mine. So off of the lows out here, this is the February lows. We go ahead and we expand this up. You can see that we are in wave number 7. Now, we've been in wave number 7 here for, well, I believe it began yesterday. So and we don't have any kind of reversal signal yet inside of this, nor do we have that inside of the S&P 500, nor do we have it inside the Dow Jones Industrials out here. So, the Russell 2000 may be nearing the point in time in which the top in it would take place. And maybe these are just like dominoes. They're going to fall one at a time. And in this case here, the Russell 2000 looks to me like it would be next up for that call. So how would that take place? Maybe if there's a hint or the market goes ahead and interprets that rates are going to rise sooner than they had anticipated, that would probably put a little bit of pain inside the Russell 2000. All those small business loans out there, those things are tied to interest rates. And if those things are going up, the cost of operating a small business will be going up as well out there. And that could be a big portion of the signal out here. Maybe everybody's been anticipating otherwise, but I don't know. I just know that we are in wave number 7, and that's the time when you really want to be paying attention, because if a reversal is going to occur, it's going to occur from there in lack of any other completed pattern. A to B equals CD pattern, price moving higher with less relative strength, and so on and so forth out there. So that's the Russell 2000. And that puts together, really, I think, just the overall market. And now all we have to do is sit and wait. We just have to sit and wait, see how the market responds today, be aware of the bouncing pattern that is out there. If we take a look at all the other futures contracts on intraday time periods out here, we're not going to find a whole lot. I'll give you an example here. I'll put the ES Mini out here. You caught me there, but what the heck can we even make out of this? What can you make out of this? This thing has just been in a nice, we can see the sideways consolidation, so to speak, out here, but not a ton of movement that you can hang your hat on inside of the ES Mini. Just not a lot out there to do. If we take a look at the Dow, not if we take a look at those charts, but if we take a look at the Dow on a 30-minute time frame out here, same real kind of pattern. Not a lot to really hang our hats here to give us any major signals. If we take a look now, there are some really important. There's one area where I can look at 30-minute time frame charts and say that there's an important signal. That's going to be this little red line drawn in the sand that is acting as resistance, like something you come up with the metaphor there. It's working really well. Take a look at that red line. Okay, 17,954 is the number inside the Dow futures, and every time that price has gotten up there, ever since about I don't remember, about 12:14 or so in the afternoon on April 21st, that has been a red line that has acted as resistance. It gets above that, that starts to change the tone of the market. We'll have to take a look at some other things if, in fact, that were to occur out here. Inside the ES Mini, it's the 2089.50 level. Every time price has gotten up there, it has found a resistance. So, those are the levels to be watching for on the intraday time period. I saw somebody mention the VIX. Let me just cover the VIX for you out here. Now, the VIX, the message inside the VIX is very clear out here. Why do I say that? Well, if you take a look at this chart, if you're watching this on Tiger TV, here's what you and I know. From the bottom, from the low that was formed in October of 2015, October 28th to be specific, if we just simply do our wave counts to the upside, where did the VIX make its high? Happened to be January 20th, and which wave count were we in? We were in wave number 7. Why do you think we're focused on the IWM, which has been running so well and could be the next one to give us a toppling sign? Doesn't mean that it will, but boy, you and I, we want to pay attention to this, just as when the VIX made its high and it came all the way down to just last week on the trading day of what? The trading day of April 20th. What happened the very next day? That confirmed wave number 7, right? Wave number 7. So now what do we've got here? Well, the VIX, we don't have that crossover of that red and black line. And the VIX index it works here, but it doesn't give us clear signal. Here's what we know. I believe at this stage, what the VIX is communicating to us is it wants to get up to the $15.98 level. It's trading at $14.67. Doesn't mean it's going to do it today, but it's given us a nice bottoming signal. It says it too wants to move higher. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the ranch, folks. Dow's up 20, S&P is off 3. Fireworks ought to begin in, and I don't know if the release of the statement is at 2:15, but it's sometime right around there. So make sure you stay tuned. David White will have all of the fireworks out there. And let's take a look at it. We've got Facebook out with earnings after the bell, I believe. I was looking at Facebook earlier inside the Tiger's Den. What we were noticing with regard to Facebook is it was moving lower with light volume. It was pulling right back into what could be a B point of an A to B equals CD to the downside. That would be the trading session from April 13th. Now, on April 13th, Facebook moved lower with 88 million shares. You're at 21 million shares. We don't even need to do the straight line math. We can see that all that Facebook is doing is testing a previous swing point with light volume. So ahead of the bell out here, the message that shareholders are delivering to you and I at this stage is that the market is going to like whatever Facebook reports out there. If I look at market profiles, we go ahead and turn those on here. Let's look at the daily and the weekly. If, in fact, it disappoints. Now, here's the bearish side, is that today price slipped below the daily bottom of that box out there. That says that could easily spike down to 103.59. Now, maybe it spikes down there and then it trades back above. I don't really know. Now, the A to B equals CD pattern out here for you, if we take a look at it, that would give you a price projection to the downside. Again, no volume today, but that would give you what? The 1-to-1 gives you a spike down right to that TAS weekly bottom of the box. I mean, it looks like it's Johnny on the spot out there. We'll go ahead and delete that. So this would say, maybe the first instinct or during the trading session, during the after hours trading session, you'd see a spike down to 103.59, complete a 1-to-1 A to B equals CD. In essence, do it on light volume, bounce off of that, get back above 106.52, and then what price would do, it would likely move back up to the 113 to 114-ish type area. But right now, as we come into the earnings release out here, sellers are not trying to jump the ship out here. They're just testing a swing point on light volume. And that is what's going on inside of FB, Facebook. What else can we look at? Oh, let's go look at some of these other guys out here. Let's go take a look at Chipotle, CMG. This gap down. Right now, it's trading out at 420.35. Let's go ahead. It's below all profiles, so we've established that there's no not hidden to us, but there is no hidden levels of support out here inside of, at least on a daily and a weekly time frame, inside of Chipotle. Here's what we know about Chipotle. It had formed a low out here, its most recent low, back in January 12th, 2016, with 1.6 million shares. You are moving into a swing point with volume, right? Well, 2.9 million shares today versus it made it with 1.6. Now, has it tested that? Yeah, it has tested that swing point. The top of that swing is 420.80. Now, even if Chipotle closes above 420.80, and you're at 420.44 right now, you'd have a rejection, but you would not have a rejection on light volume. It would say that price would be right back down there again. More likely than not, Chipotle is going to go test the low at 399.14. Now, I said test the low. It may take out the low because it is moving down with volume. Now, if it does that, it'll set up one of the larger A to B equals CD patterns, and it says that there's really bad news for Chipotle out here. Not just bad news, but like really bad news. I mean, the A to B, if I put this, let's look at the weekly though. Let's go see what we've got going on weekly wise and volume wise, because this shows that A to, whoops, I got to somehow spread it out here. There we go. So we spread it out with butter. So now we're taking a look at the January 11th week. That had volume of 13.7 million. This week you're at 5.6. So we're like halfway through. You'd have to say that could be easily 12, 13. So it's moving into that swing point as well with volume. If that were to be taken out, this is on Chipotle. If we take a look at the A to B equals CD pattern here, as I say, it's a doozy if it really occurs out here. All it needs is a couple more cases of norovirus or something out here. I'm not suggesting that, but the A to B equals CD pattern takes you down to $184, a stock that was up at 757. So it's really important to watch what what Chipotle does as it gets back to that swing point, in the next couple of days or so, because it does look like 399.14 is in the cards, at least as a 1:47 p.m. What else? Buffalo Wild Wings. Let's go take a look at Buffalo Wild Wings. Not on my Stevie's approved diet program. Down 33 pounds right now, so still on the move lower. The goal is 60 lbs out there. Whew. That will be something. It's going to take a little bit longer, I think, for the next 30. The first 30 came off pretty easy, believe it or not. Now, if we take a look at Buffalo Wild Wings, gapping down with volume, gapping down into an area where it had broken out. So it is testing that low. Let's go take a look at it. This is the daily chart out here. The low on Buffalo Wild Wings I'm referring to is October in 2014. Did volume there of about 521,000 shares. Today, you're moving in that area with already 3.2 million shares. But it's an important level for a price to hold. Why is it an important level? Well, I would say for a lot of reasons. Well, one, there's an A to B equals CD. Today, it probably took out the B point. This is a large one, too. There's some large... What the Sam heck just happened there? Good Lord. I think I know what happened. There we go. Let's see. Okay. It took out a B point. Let's go take a look at these large swings. So here's your swing. The trading day. Wow, son of a gun. So what Buffalo Wild Wings has done, and I'd like to get rid of that. Show left side. I don't want that. Here's your A point inside of this equity. It's all the way up here at the highs. Not good news, September 23rd. And your B point that I would use, right where you see a decent change in trend, is the bottom of this February 5th level. And then a retracement right up into the gap. And now you've got A to B equals CD that takes you to $98. $98 is what it looks like. Buffalo Wild Wings is headed to over timeout here. From a stock that was up at 205 not that long ago, back around the fall of last year out here. 205 down to 98, could be even more than 98 to the downside. So that is not looking very good. Amazon, let's go see what Amazon has to say off $12, just 2% out here. What's Amazon trading back into? This is the daily chart out here. And what can we say about Amazon? Did it complete an A to B equals CD to the upside out here? It doesn't look like it to me. So we don't have that pattern. Close, but not exactly a cigar out there. So we won't call that a completed pattern. I'm not so worried right now about that green line. That would have been from before. So you got a small A to B equals CD out here, but even that is with light volume, right? Your B point would be this April 22nd. That had 5 million shares today. You're at 2.4. So Amazon doesn't look well. Here's what Amazon has done. Oh, it's broken a little rising trend, has it not? Let's see. Oh, it has not. There we go. So Amazon is going to pull back really into that trend line. If it breaks that trend line, this is the one coming off of the lows out here February 9th, is touch point number 1. Touch point number 2 is the low from March 21st. So price is coming back and testing that trend. You break that trend line, then price moves back into the March 21st level, somewhere between 538 and 555. Dow's up 25, S&P's off 2. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. 22 points to the upside is the Dow. If I take a look at the Dow Advanced Decline Oscillator, are we below zero? We are still below zero. So even though, so that says that it is sellers right now that are in control of the Dow. The stock, the Dow has looked pretty good out here. Obviously, if Apple weren't dragging things lower, we wouldn't be seeing that. But just a sideways-ish type move inside of the Dow. We'll see if there's any kind of fireworks. New York Stock Exchange, I want to correct one thing that I said yesterday. Of course, I would like to correct everything that I said yesterday that might have been an error. But there is one thing. I mentioned that I would go ahead and show you this chart because I keep the data on it in a spreadsheet. I don't always update it because I've got to import the data manually in order to get this information. But nonetheless, here it is. I had mentioned in the New York Stock Exchange. So the one thing that I said that was correct was in the advanced decline line, we're at all-time highs. We may not be there in price. That doesn't matter to me. Well, and the reason it doesn't matter to me is because it has no relevance to trying to find divergent patterns that are going on inside the market. We like to take a look at the advanced decline line, okay, which is the center portion of the screen right here. And we like to see where price is moving higher on a shorter-term time frame, and this is moving lower. Well, in the advanced decline line, you don't have that. You're at all-time highs in the advanced decline line. Total. Okay, and you're looking for the divergence the other way. You want to see price moving higher and the advanced decline line not confirming that message. Through yesterday, you're at all-time highs out here inside the New York Stock Exchange. I had also mentioned that we had a confirming signal on the volume aspect as well, which is the bottom portion of my screen. And that was where I erred out here. Shame on me. Now, it didn't mean that we had a divergence because you're basically near the highs out here that were generated just back on April 20th. So I don't know what today is going to look like. These are two of the reasons, okay? These are two of the reasons there is no divergence in that advanced decline data and no divergence inside the volume data. Doesn't mean that they can't form out here because they can. But we do not have any type of divergent pattern. A divergent pattern just as back here, the May 20th top out here inside of the New York Stock Exchange, we had that divergence, both with regard to the direction of price as well as the AD line and the advanced decline volume line. That is how tops get formed in the market. So therefore, we've seen one piece of the market fall. That's the NDX 100 thus far. The utilities have also fallen out here. If the market responds badly, today, tomorrow, we get a seventh wave confirmation inside the Russell 2000. That is likely the next to fall. With the SOX index probably not too far behind that. And what that sets up is a anticipated, natural, normal move as we go into that sell in May cycle out here. What does that say? That says that by July, we're going to be at new highs. And at that stage of the game, new highs above, where we're trading. Now, that's a dangerous thing because if we really do get there, okay, you got to plan your trades. You got to plan what the market is communicating to us. If we really do get there, and the S&P takes out its all-time high, and the Dow does, it really screws with that seventh wave move on the monthly charts out here. And we'll go figure that out when and if that happens. But inside the NYSE as we speak right now, no, the volume oscillator did not make new all-time highs, but there's no divergent pattern that says that this is going to be anything more than just a normal retracement in the unfavorable seasonal cycle. And what does that say? That says you want to buy the next bottom out here because it should be another nice bounce going into the July timeframe. But that is weeks away from where we are at right now. It is weeks away. I believe it's weeks away out here. So stay tuned, folks. Our man David White, our local polar bear, he's going to be up next. Of course, it's Wonderful Wednesday. That means we got the Tom O'Brien Show from 3 to 5. Have a great day, and I look forward to seeing you mañana. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.